JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius and Anucauskas. Today is the 10th of March 2020, so yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a quick look at the markets, view the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, also, just before we jump in, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis. So yep, feel free guys to visit us here on jfdbank.com and yep, click on the research tab right there. Right, now then, let's jump into the charts. Now the first one I want to touch on here is the FTSE 100. Now I talked about this one yesterday, and basically I talked about this one in my Espresso and Traders Tea Time, but what I was saying that in a way the whole picture here is not really good, doesn't really look very well for the buyers. We've managed to close the trading session around the 5,965 territory, not far from this level here, the 5,958 zone, which is basically the low of there we go, this one right here, the 27th of June of 2016. So we've ended the day, like I said, around there, but looking at the cash index, and that's probably where the whole excitement is coming in for the buyers, of course, because we are seeing right now a nice recovery, a bit of recovery here, and the price is currently trading around the 6,153 mark. So basically it is currently around here, just slightly below that 6,200 zone. Of course, don't get me wrong, yes, it is looking quite nice and quite good here for the buyers. The only thing is for us to probably start considering some higher levels. Again, we would like to see a push above the 6,460 zone first, and only then target some higher levels. Until then, all this zone here for us is somewhat of a neutral one, and that's why we're not going to really focus too much on the upside yet. Again, for now, the only upside we consider is a temporary correction before another leg of selling. But if the price gets back above the 6,460 zone, this is where we will start considering a possibility of maybe going a little bit higher here. For now, be very careful, guys. We're not far from these other important areas of support, especially near this. We're not far from the lowest point of June 2016, and that's roughly around the 5,788 zone. So something to keep an eye on, guys. For now, yes, as I said, we are seeing a bit of a recovery on the cash index, but probably the bulls should not get their hopes up yet until we see a good push back above the 6,460 zone. German DAX. The German DAX, of course, as you can see, this is the daily chart, by the way. You can see how many runaway gaps we had here to the downside. So 1, 2, 3, 4, even 5. So of course, all this is not does not look good. Last time I talked about DAX was last week, and what I was telling you guys, if this barrier here, the 12,200 territory, continues to hold, we could see another round of selling. So this is what happened. Fantastic, good kind of good call, I would say. But the way we're going to look at this one right now is, of course, we're going to focus on this level here, the lowest point of August 2019, which is around the 11,266 mark. And in a way, looking at the cash index right now, of course, the cash index is also recovering. We are seeing that the price is around 10,900 zone, maybe just fractionally below it. So in a way, if this decides to travel a little bit higher here, maybe let's say if it overcomes the yesterday's high and travels further north, as long as it stays below the 11,266 territory here, we'll stay bearish. If it climbs above it and stays above it, then this little territory here for us will be somewhat of a neutral one. But if it climbs back above the 11,550 territory, somewhere around here, now this is where we will potentially consider a possible move to the upside again. So that's why I do understand that we're kind of, let's say, missing out on a possible kind of move here higher. The only thing is that we'll to be honest, we'll try to be safe than sorry here, and that's why we would prefer to see a push back above the 11,550 territory here before kind of let's say we could consider a potential move back to the upside. For now, any move higher could still be seen as a temporary correction before another leg of selling. Again, like I said, for now the price is balancing around the 11,900 mark, maybe just slightly below that, but nevertheless we'll keep an eye on it. And for those who are more on the cautious side, what you could do here is just wait for a drop below the yesterday's low near the 10,555-56 zone, and then aim for further declines. Now, as we can see, we do have this good area of support, the lowest point of December 2018, and that's roughly around the 10,280 zone. So basically a good potential target if we get a drop below the 10,555 mark. For now, of course, don't get me wrong, if the current recovery that we're seeing right now in the cash indices will let's say will continue pushing further, then yep, keep your eyes on this 11,266 zone, which is the lowest point of August, and if it holds, we could see another round of selling. If it breaks, this little territory will be somewhat of a neutral one for us, and if we get pushed back above the 11,550 territory here, then yes, we will potentially consider a possible move higher. Gold, very quickly on this. Now, this is a daily chart as well, and of course, overall, you can see that we're climbing higher, trading above this upside support line taken from the low of the 21st of May 2019. But yesterday, after it kind of failed to push higher, the commodity today is seen a little bit on the downside. But what I talked about yesterday was that if this area here, the 1652 mark, somewhere around there, continues to hold, we could see a nice rebound and a push back to the upside. So as you can see, this is what's happening right now. We are getting that rebound from this territory, and of course the big question here is, can this move back up here? Now, of course, don't get me wrong, for those who are more on the cautious side, you could just wait for a break above the 1703 zone, which is the high of yesterday here. And this way, this would confirm a forthcoming higher high, and more buyers could join in. For now, like I said, we're keeping a close eye on the 1652-53 mark. You can see that it continues to hold. If it does that, then yes, we'll remain more positive than negative on this one, and target the 1703 or even higher levels. If by any chance this starts sliding below the 1633-35, around 33-34 mark, if it starts sliding below this would also place the price below the 100 EMA here on the 4-hour chart, shown as the green line. And to be honest, more sellers could see this as an opportunity to step in and drive the commodity towards this intraday swing high here of 2nd of March, and or should I say actually the highest point of March, of the 2nd of March. There we go. So the high of the 2nd of March here near the 1611 zone, this could be a nice potential target here for this commodity, and this is where also the commodity, the precious metal could test the 200 EMA on the 4-hour chart. So basically, guys, long story short, for now, yes, we are seeing a hold up near the 1652-53 mark. If it continues to do so, we could see a nice good push higher again, at least towards this 1703 mark. But if it struggles to stay above this area, then watch out for this 1633-34 zone. A drop below this could send the price lower. Bitcoin Cash. Now, I haven't looked at this one last week, and basically what I was saying, guys, that we were for us to consider the upside, we needed to see a push above this territory here, above this key area of resistance, which previously acted as a wonderful support area, but we never got that. We got a hold up near this 354 mark, and yep, as you can see, it's sold off. What I was saying as well, that if we get a drop below the 300 territory here, then yes, further declines are possible towards the 258 zone, which is the low of the 11th of January this year. So as you can see, it did drift lower. It did overshoot it a little bit, but still kind of stayed above this. So as you can see, neither of the 4-hour candles are currently kind of able to close below this. So once we see that, something like that, if we see at least a 4-hour candle close below this barrier, below the 258 zone, then yes, we will aim for further declines. And the next level for us could be around the 230 mark. Let me just put an arrow here. Just we'll go step by step on this one. We're not going to drag this one very far to the downside. Like I said, we rather pick up on this one again at some point here. And for now, yes, we're keeping a close eye on this 258 zone. If we get a nice good drop below this, then yes. Or as I said previously, if we get a nice, at least a 4-hour candle close below this barrier, then yes, we will aim for the 230 mark. In terms of the upside, well, again, as still the same idea remains, the more comfortable level for us is a break above this territory, the highlighted area here. But from the very, very short-term perspective, in a way, what you could do here is keep your eyes on the psychological 300 zone. A nice good push above it could, in a way, lead towards this this highlighted area. For now, yep, we are more bearish than bullish, but we need that confirmation break, and, or as I said, at least a close of a 4-hour candle below this level. USDJPY, very quickly on this. So it's trying to recover after yesterday's sharp fall here that we saw. The pair managed to recover already all of its losses, and now as you can see, it seems that the bulls really are in the mood to push this one further north. For now, that's exactly what we're going to be considering here. The only problem, of course, as you can see, this downside resistance line taken from the high of the 21st of February, somewhere around there. So basically, if this makes a push above the 104.96 mark, then yes, we will aim for this downside line, which, if it holds, could lead to another round of selling. So that's why for now, guys, from the very short-term perspective, yes, we will aim for higher levels, especially if it pushes above the 104.96 zone, which is also the lowest point of last week. And if it travels above this, then yep, we might see a hold up near this downside line, or should I say, actually, another way, I should probably rephrase this. If it holds near this downside line, then yes, we could see another round of selling, and then if the rate starts falling back below the 104.96 zone here, then yes, it just could increase the pair's chances of drifting back down again. Now, in terms of the upside, now, Of course, we need to see a break of this of this downside line, but also we would like to see a push above the 106.82, 83 zone, somewhere around there, before getting a little bit more comfortable with higher levels. Then we'll aim for the 107.74, which is the high of the 4th of March. And then, of course, there are a bunch of higher levels that could be met as well. But for now, of course, for now at this point in time, any upside could be seen as a temporary correction because we're still trading below this downside line. And if we continue to do that, then yes, we will aim for another move lower. Jumping into GBPNZD. Now this is going to be a very quick update. I've talked about this one yesterday in my Traders Tea Time and Espresso as well, and just a quick refresh. So what happened here? So yesterday I've talked about this one in my tea time, but I was looking at this daily chart, and I was telling you guys to keep a close eye on this. Excuse me. I was basically telling you guys to keep a close eye on this barrier here, the 2.0559 zone, which was basically the highest point of October 2019. As you can see, that the candles here, the daily candles, were not able to kind of close above this, or struggling with this barrier. But yesterday's push higher, of course, not only that we had a strong overshoot of this barrier, but then at some point, one point, and it was clearly visible on my Traders Tea Time. We were trading back below this 2.0559 zone. So what I was saying, that if we get a nice close above this, then in a way there could be more chances for this one to drift back up here. For now, you can see that this is what we got yesterday. The candle closed near this other high, near the high of the 28th of February, and that was roughly around the 2.0671, 72 zone. So as you can see, the bulls are really trying to push this one further north. For now, to be honest, we are probably more bullish than bearish, unless something changes today drastically. But again, like I said, looking at this picture, we may see this one traveling a little bit higher, maybe hitting areas like 2.08 or maybe 2.10. Could be nice areas of resistance. But for now, to be honest, we'll be very careful and cautious here as well. In terms of the downside, we would like to see a push back below this 2.0559 zone before considering deeper extensions to the downside. And to be honest, a deeper extension to the downside could still be seen as part of a larger correction, because we are still trading above this upside support line taken from the low of the 30th of July 2019. So that's why, guys, for now, the downside scenario for us could start from this key level that I spoke about recently. EURNOK. Now, something that you probably don't look at very often, but we did get the inflation figures right now from Norway, and so the core inflation month-on-month figure for February came out worse than expected. It came out slightly better than the previous, so it came out at 0.5%. The forecast was at 0.7, and the previous one was 0.4. So slight disappointment from the forecast, of course, but the headline year-on-year CPI figure from Norway came out as a disaster at 0.9%. So the forecast was 1.6 and the previous number was 1.8. So you can see here that we are having this kind of slightly opposite effect here. As you can see, the EURNOK here is dropping lower. Now, don't get me wrong, everything's kind of still relating to oil here mainly. So although we had those disappointing inflation numbers, still, as you can see, then the EURNOK pair is sliding lower. Don't get me wrong, we may get this one a reversal back to the upside, because for now, looking at this picture, yes, we are quite overstretched here, even on the daily chart. But for now, don't get me wrong, this little move lower could be seen as a temporary correction before another leg of buying. For those who are more on the cautious side, you could just keep an eye on this barrier here, the yesterday's high, which is around the not far from the psychological 11 level. You can see that the price is now falling back down here, but overall it's still in an uptrend, and don't get me wrong, we may see a bit of a correction here lower. For now, the let's have a look at where how far it could continue correcting. So if we actually grab from this little low here and drag the Fibonacci retracement to here, we can see that the price the rate is already around the 23.6% retracement on the Fibonacci. So keep your eyes on this one. If it drops again below this, then yes, we will consider a potential 38.2% retracement on the Fibonacci. This, by the way, the Fibonacci is taken from the low of the 3rd of March and up until yesterday's high. So if you want to, you can draw the same thing on your charts and have a look at this. But again, for now, you can see that the rate is getting a hold up near this 23.6% retracement on the Fibonacci. If it holds, yep, as I said, we could see another round of buying here, and especially if it travels above the yesterday's high, and then yes, we will aim for higher levels. And finally, Euro USD here. Now this one's getting a nice correction here to the downside. That's also explaining why EURNOK is drifting lower. So it's basically the euro weakness is dragging the pair lower here. Sorry, the currency lower here. And of course, maybe this is due to the short the coverings here. Investors are exiting, taking profits here basically, and now the pair here, EURUSD, is drifting lower. It's currently finding support near this 1.1355 level. I talked about this one yesterday in my traders tea time and espresso, and what I was telling you guys to keep a close eye on this one, because if this holds, we could see another round of buying here. But if it struggles to stay above this barrier, well, I mean, we could go for a deeper correction here to the downside. So that's why, guys, for now, be very careful and cautious. Yes, don't get me wrong, we are quite overstretched, and I am looking here at the daily chart, and we are quite overstretched here to the upside, but already this morning we are seeing a sharp move to the downside, almost 100 pip move down to the downside. So that's why we'll take this move with a pinch of salt. Of course, if we do see the pair staying below the 1.1355, then yes, we will aim for further declines, maybe not today but tomorrow. But if it stays above this, then, well, I mean, the buyers could step in here again and drive this one back to the upside. So keep your eyes on this one. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching until the end. And I can see somebody saying good morning to me, so yep, good morning, guys, to you as well. But I hope you have a fantastic trading day, guys, today. I hope you be very careful, you stay careful, as like I said, this is a very interesting, if we can call it this way, situation in the market right now. So be very careful, have your stop losses in place, and I'll see you later on at my traders tea time, 14:15 GMT. For now, bye bye. Thank you very much.